As you advise clients, whether they're people looking for jobs or they're companies coming to you saying we need people in this area, where are their banking jobs being created today as opposed to some of those ones going away?
Sure. We found that the U.S. Banks have been expanding into different areas. They've expanded their asset management business. They've expanded their retail bank and corporate banking opportunities. And the advisory firms have also been continuing to hire coverage bankers who have deep relationships. So that's where we're finding areas of growth.
With 18,000 jobs about to hit Wall Street, is there enough capacity to pick those jobs up elsewhere?
So the U.S. banks, the Canadian banks, the Asian banks will absorb some of these bankers. We're also finding that there'll be homes at family office firms who have seeded strategies, whether hedge fund strategies or private equity strategies or fixed income strategies, that will house some of these bankers, in addition to corporate roles too.
Where are the jobs not? So if this happened like 10 years ago, where will we have found the jobs versus now?
That's a great question. Some of these bankers are going to have to reinvent themselves. There will be new opportunities for them in fintech if they have that expertise in insurance and other areas. But there will be some homes for these folks.
But it's not like the late, after 2008, where every hedge fund was hiring every trader out of an investment bank. What happens to all the traders, especially the equities divisions are being cut? How can they find jobs elsewhere?
It's a great question. There will be some opportunities in equity capital markets. On the buy side, many funds have created heads of capital markets roles in addition to origination roles. So if you're a leveraged finance banker, for example, you'll have a very attractive job opportunity in a direct lending role, for example. So there will be roles for these folks, but it won't be for everyone, unfortunately.
Are the so-called non-bank banks as labor-intensive as the traditional banks?
That's a great question. I think that's probably right. Sonali probably has a point of view there.
Yeah, I mean, it is a competitive job, right? And we're seeing a lot of the non-bank lenders raise record amounts of money, and so these bankers will be under a lot of pressure to deploy that capital. And these are people moving from the sell side to the buy side, after all. How competitive are these jobs?
Right. So moving to the buy side, it's been a dream job for a lot of bankers to move to the buy side. Usually you do it when you're a third-year analyst, for example, not when you're a senior banker. There have been bankers that have broke the mold, that have been able to take investor roles at senior private equity firms. But again, there will be opportunities in capital markets as well as direct lending origination roles.
Well, I'm glad that you brought up sort of the distinction between a third-year analyst and a senior banking role. I mean, that obviously comes with a lot more money. So can, private equity or leveraged finance pay these bankers what they're used to getting paid?
Yeah, so they're going to have to reinvent themselves not only for their role, but also how they think about compensation. When you move to the buy side, a lot of your compensation is structured in long-term carry as opposed to cash.
And this is after 3 years in a row we've seen pay rise, and then last year all of a sudden it fell on Wall Street. Are the banks going to be able to pay their talent to keep them around?
If you are a productive banker, you will always get paid. The others, unfortunately, are not as happy with the pay. So it's a new norm for some. But people are always managing their careers, we're finding, and we've been called many months in advance about people managing their careers and looking for opportunities.